As of July 23, 2025, investors are keeping a close eye on 5 standout stocks that are shaping the financial markets and possibly your portfolio. These picks aren't just trending, they're backed by solid fundamentals, market momentum, and future-facing growth. Let's break down what makes them so attractive right now. First up, we've got Apple, trading at over $213 per share. With a market cap of more than $3.28 trillion, Apple continues to dominate with its powerful mix of hardware, services, and a growing footprint in artificial intelligence. Investors are eagerly watching for new product launches this fall, especially with strong expectations for more AI features and integration into their device ecosystem. Apple's consistency in dividends and share buybacks also makes it a safe harbor in stormy markets. Next is Tesla, with its shares climbing above $330. Tesla is riding the wave of global electric vehicle adoption while branching into energy storage and advanced battery tech. Its ability to adjust pricing and launch new models keeps it highly competitive. However, investors should pay close attention to delivery numbers, profit margins, and how government policies in places like China and the US impact EV demand. Then we have Nvidia, the tech giant that recently hit a jaw-dropping $4 trillion valuation. Their new Blackwell chips are fueling the AI boom, and demand doesn't seem to be slowing anytime soon. However, Nvidia is also navigating export restrictions, especially when it comes to shipping high-end chips to China. Still, as long as AI remains the buzzword of the decade, Nvidia is right at the center of it. Palantir is also making waves. This data analytics and AI powerhouse is growing its revenue at more than 50% a year, especially in defense and government sectors. Its platforms help agencies make sense of complex data in real time, and its expansion into commercial markets adds even more upside. The key to watch here is how fast it can convert new contracts and scale its AI-driven software to more clients. And finally, Dollar General, a value retail chain that thrives when wallets get tighter. With inflation still hanging around and consumers looking for cheaper alternatives, Dollar General has become a go-to spot for basic needs. Its stock is gaining traction as investors bet on more cost-conscious spending patterns in the second half of 2025. Now, these stock picks are not just about company performance, they're influenced by wider market forces too. One big trend this year is corporate share buybacks. U.S. firms are expected to pour about $1 trillion into their own shares, lifting valuations across the board. Artificial intelligence continues to be a long-term driver of growth, favoring companies like Nvidia and Palantir. Meanwhile, rising trade tensions and potential tariffs pose risks to companies involved in manufacturing and hardware, such as Apple and Tesla. Defensive sectors like utilities, financials, and discount retail are also getting more attention as investors look for safety. So, what should you be watching to navigate these markets? Keep an eye on inflation data, interest rate decisions from the U.S. Fed, and consumer confidence numbers. These directly affect companies like Dollar General and Apple. Trade policies and geopolitical developments also matter, especially for chip makers and EV firms. And don't forget to track earnings guidance and capital expenditure from big tech players, because those numbers will tell us whether the current rally has legs or not. If you find this interesting, don't forget to like, share, and subscribe to our channel, 2230,